ended a tough week on Wall Street. Both the S&P 500 and NASDAQ took losses Friday as well. Energy companies led the market slide as the price of U.S. crude oil tumbled to its lowest level in more than a year, and markets next week are expected to respond to some big factors, including Brexit and developments in the trade tensions between the U.S. and China. So, here with more on how to understand volatility in the market and why you shouldn't panic is Brent Wilsey of Wilsey Asset Management. Brent, always great to see you.
Well, good to be here to help.
Boy, the up and down on Wall Street this past week really had people, oh, what should I do? What'd you take?
And they're kind of freaking out about the 401ks going down and the IRAs and, oh, you know, this is terrible. A recession's coming. They think all these crazy things. I tell people, just back off and think about what's really going on. That's what I want to share today, Jason, because when you look at things, I mean, ups and downs are part of investing. And actually, going back 37 years, 76% of the time, the market's up. Okay, so that means a quarter of the time it's down, so don't worry about that. And actually, throughout that time frame, throughout the year, it can be down as much as 14%. So don't panic, because you know 3/4 of the time, you'll be right.
Yeah, and I think that when people, that's the knee-jerk reaction for a lot of people is, oh no, it's time to sell.
Yes.
I got to get out.
Right.
I'm going to lose my money.
Right.
But that's just part of the game.
And you know, Jason, we have many clients been with me because I've been doing this now for nearly 40 years who over time have made a lot of money, you know, became millionaires and so forth by just being patient. And we're very calm in our firm. We don't get all excited about this. And I'll tell you why, Jason, because people don't realize what goes on behind the scenes. The average normal trading volume that goes on of a stock is 0.3%. So when you see all these downs and so forth, that's only 0.3%. And you might say, well, it's different when the market's high in volatility. Well, then it jumps to 0.6%. So why get so excited about 0.6% when over 99% of these stocks are being held? It's just that little volume because of other things that go on in the market.
We also have to go back a couple of years when the stock market, I don't think, had ever hit 20,000.
Right.
Is that right? And then and then it goes to 25 and 26, and now we see the backslide and people are panicking. But it's kind of important to have that history in mind, isn't it?
Yeah, and you know, Jason, the right side of the chart is always higher than the left side of the chart, but people's emotions take over, they get concerned, and the thing they don't understand is not you, me, the other person trading, and that's who's selling. It's something called high-frequency traders, like day traders. And sometimes they can count for as much as 73% of that volume. So all this volume you're seeing, it's not the average Joe Blow. It's not, the pension plans, the investors. It's craziness of people trading for, many times, just a penny.
Talk to us about the importance of knowing your investments.
Jason, that's the most important thing, because if you know what you have, and that's why we don't panic at our firm. We've seen things happen. We understand the companies that we own. Again, we own stocks, we own equities. When you understand that you own a food company, you own a drug company, you own a energy company, that business is making money. They got a good balance sheet, not a lot of debt. You own something. You understand that. It brings your emotions way down, because if you don't know what you have, you'll be sucked into the trading. But if you say, no, wait a minute, this company's making money, it's a good business, it's a good food company, I'm going to stay with it and weather the storm.
Okay, and that is what people learn at your seminars.
It is. And
your seminars go at about an hour and a half?
Yeah, probably about 90 minutes about what we go for.
Very interesting.
And we pack all that information about things like we're talking about now to really help people get out of the emotional roller coaster they're on and understand how to really invest and do properly and think about the longer term, not about the short term, and again, short term 3 months, 6 months, but understanding, and again, we're talking about understanding investments, how to understand those investments.
It's when to know to get in, when to know when to get out.
Yes.
Okay.
And it's longer than people think. It's not in and out. Yeah.
Right. Okay, so what are we, December 6th?
December 6th, yeah. It's going to be in Scripps Ranch at 7 o'clock is when we start. It is free. Now, seating is always limited, but it is a free workshop for people to understand investing.
Yeah, the house tends to pack. If you have questions about your investments, this is definitely the place to be.
Yep.
It really is.
Now, it's on our website.
SmartInvesting2000.com.
You got it.
Knew it. We put a link. We have a link on ours.
I appreciate that.
All right. Well, friends here. Okay.